come I say to Alasdair Macleod? He's a very, very old friend of mine. At least what 15 years, Alasdair. We're two of the old timers here in the gold industry. And I think we have the same feeling, both of us, that we're just starting now, really. I mean, we built up a good business for almost 25 years, but I tell my guys, my colleagues, that we're just starting now, and we still have a sizable business today. But I think now is the real time when more than the 0.5% of world financial assets will go into gold. My background was in gold, that I was worried about the world as from a debt and credit point of view. Already in the 90s, early 90s, and of course with Greenspan, you saw clearly what was happening, building up the debt and manipulating interest rates, etc. But gold was still in a downtrend. I mean, I have the fortune to be working during the whole of the gold cycle. So from the 71 Nixon closing the gold window at $35 until now, and it's been fascinating. But we went into gold seriously for ourselves and for clients in 2002, when we felt that the cycle had bottomed, and that was at $300. And of course, now we're up 10, 11, 12 times, depending on the currency, or even more in other currencies. And as I said, I think this is the real beginning is now, because there's so much happening in the world that will make gold much more significant than it is. So tell me, how did you actually get into gold, Alasdair, from your banking career?
Well, I've always had an empathy with it without necessarily understanding it. I mean, I became a stockbroker in 1970, and as you say, 1971 was the end. Well, the Bretton Woods agreement was suspended, quote unquote,
Yeah.
and of course, which meant it was ended. And I mean, at the time, I couldn't actually understand quite what this meant. But became clear that the only game in town after that was gold, because it
Mm.
ran from $35 up to $1,850. At the same time, we had a massive bear market in the UK in equities. Um, I mean, the equities peaked in 1972, and by the end of 1974, they'd lost about 75% of their value,
Mm.
including something that was called the secondary banking crisis.
Yeah.
It was a commercial property crisis, which basically took out a whole load of
I
foreign
remember it
banks.
well. Sure.
Yeah.
Yeah.
You sort of learn over time from all these bits and pieces. And I mean, thank goodness I never went to university and did an economics degree, because I didn't have to get rid of all that rubbish.
Yeah. 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 Yeah.
And really, I'm sure, like you, it's been a process of self-education over the decades. You mentioned Greenspan. Um, I remember some of his statements. I mean, the man was, he was like God to the macroeconomic
Yeah.
establishment.
Yeah.
Nobody ever questioned what he said.
No.
And yet now he's retired. He's been interviewed by the World Gold Council and sort of said, "Well, gold is the best thing since ever." And
Okay.
I
Isn't
don't
that
know.
excuse me, isn't
Yeah,
that interesting? Yeah, but everyone who puts on a political hat changes his view totally, especially when it comes to gold. Because as you said, Greenspan, before he became chairman of the Fed, he was talking about the virtues of gold for a long time.
yeah,
Um, and then after, he's doing it again.
yeah,
But in between, he has to lie like every politician who comes
yeah.
into power.
Well, this is fascinating. And we're seeing the same thing with Scott Bessent, aren't we?
Yeah.
Who, before he was appointed Secretary of the Treasury, apparently it was a gold bug and all the rest of it, and supporting the idea that, yeah, we've got to go and see how much gold the Treasury's got and all the rest of it. And suddenly, stumm, silence, nothing.
Yeah. Yes.
Um, I mean, this is reality, isn't it? Really, Egon. I mean, the political imperative is completely different from, let's say, a sound money imperative. And I mean, when I look at how people understand gold, they don't seem to appreciate that everything works on credit.
Mm.
And it's credit that needs to be anchored in terms of its value to real money, which the Romans set out way back in, I think it was 548 BC, when the produced the 12 tables. They defined in that the difference between money and credit. And we've been working on the same basis ever since. So, when it comes to the value of credit, it just hasn't been anchored to anything
Mm.
other than faith, if you like, in it since 1971. And that's, this is now coming home to roost in terms of huge problems. Because, I mean, you mentioned that, you've been looking at debt and credit and so on over the decades. I mean, you're absolutely right. That's the thing. I mean, debt is actually a good thing, as long as it's not overdone. Um,
Yeah.
and it's when you get the bubbles of debt, which is matched by a bubble in credit, that things start going awry. And I
But
mean, we've seen the performance of gold recently, and I think it's rather reflecting that things are beginning to go awry. Of course, there are also, other factors involved, like Trump's tariffs and all the rest of it. But basically, the credit bubble's just become too big and it's going to implode. And so where do you go? You get the hell out of credit. Where do you go? You get into real money, which is gold.
yeah. No, this is what, as you said, this is what it's makes it so easy to like gold.
Mm.
Because we know, no politician ever studies history, and if he does, he will say it's different today because I'm now I'm I'm now in power, so I can change things, make it differently. But the cycles are there, and they're not going to be changed. And you and I know that for thousands of years, every single form of money has been destroyed except for gold.
Yeah.
I call gold eternal money or nature's money
Mm.
because it's interesting. It's the only thing that has lasted, and that's not made by man. That's made by nature.
Yeah.
Uh,
Well,
so-
except there is one point I think which is desperately important, which nobody really seems to appreciate. It has that position in law. This is why it goes all the way back to 548 BC, the 12 tables. I mean, they had a different coin in those days. It was really a sort of bronze coin, which weighed about a pound. But gold came in on the back of that definition. I think it was table 7 of the 12, the difference between money and credit. You know, money is immediate settlement, credit is deferred settlement.
mm,
It's all written there. And of course, every nation which went out and colonized the world was born out of the Roman Empire. Is all in our common law. So it's not just this sort of natural nature thing about it, with which I agree entirely. But the reason that it has survived is partly that, but also it is written in law. And so for the US Treasury to turn around in 1971 and say gold is a pet rock, it is no longer part of the monetary system, the dollar is the king currency, is actually in defiance of the law as well as human instinct.
yeah,
Sorry, I
but
interrupted you.
no. We're having a chat, so absolutely, please
Mm.
interrupt. Um, no, but this is where history is on our side also, because it's so easy to forecast what's going to happen to gold for the simple reason that you have governments and you have central banks always on your side. They are always supporting gold with their actions.
Yeah.
Without fail throughout history, destroying whatever other currency there was in the system. Uh, and that's why, it's so, to me, basically, we went into gold at the beginning of the century, and for ourselves and a few friends that we held, bigger investors. And then people were asking for help, and then we created a system where we could help people around the world, which we're doing now. Uh, but and I explained to them that, you know, that what we're seeing now in the system and the problems we're having, and we're coming to the end of a cycle. And that's a major cycle, and only historians will tell us afterwards that the size of this cycle, if it's a 200-year-old cycle or a 2,000-year-old cycle, whatever it is. In my view, I think it's a major cycle. I think the crash or the fall of this system here will be serious because of the simple reason that the world has never, ever in history had a debt of this level on a global basis. There's always been continents before, or countries that, other countries could help out, but now it's the whole world, and therefore there's no one there to help. And therefore, I think we are going to see, a major collapse of this system. I know it sounds dramatic, but you and I have been talking about this for a long time. You've been talking about the fall of the banking system for quite a while, and so have I. Nobody wants to believe it, and of course, we are called prophets of doom and gloom, and nobody, nobody, none of your friends or even your wife wants to hear it, basically. But because they get bored, and of course, yes, bearers of bad news, I mean, they get shot or hung or whatever.
Yeah.
So it's obviously not to have a negative message, but I have always approached gold not from the point of view of bad times. It's only a question of risk, and therefore, we came to the simple conclusion that gold is the best form of or investment or asset, rather, that actually protects you from the risk of this system that we're talking about.
Yeah.
And that's why we are in it, isn't it, Alasdair?
Absolutely. I mean, we have a problem which is rapidly coming upon us, and that is the debt trap, which governments now face. I mean, government debts to GDP have been higher in the past, sure, but there is absolutely no discipline on governments to try and rein them in today. If anything, they're just getting worse. In the case of the king currency, the dollar, we're looking at a debt to GDP of what, 125, 30%, something like that, rising at the rate of 2 trillion or so every year. Now, the point about a debt trap is that that's absolutely fine as long as it can be financed. But the problem is that if you get a contracting economy, then your tax revenue starts contracting, your welfare expenses start increasing, and because governments never pay interest, they always roll it up. You rapidly get into a situation where you can't finance your debt. And that is now, I think, beginning to hit the US Treasury very, very hard. And it's compounded by the fact that countries such as China and Japan, who hold quite a lot of US Treasury debt, are beginning to understand these debt trap dynamics. And they basically just don't want to get involved. They're not going to put any more money in. So the question is, do US institutions step up to the plate and do something? And the answer there is, well, they can read exactly the same thing that we're discussing. So what are they doing? Well, it's all short-term finance. They're all going into T-bills. And the banking system, which doesn't actually like the risk in the private sector because it sees that the private sector isn't all that bright either, they're putting all their spare credit into T-bills. So it's all going very short-term financing, and they can't finance out along the yield curve. Now, this is leading into a rapid crisis. We had the same thing in the UK. I'm sure you'll remember. I think it was about 1975. We had a socialist government then, which was spend, as they always do. That led to a sterling crisis. America very kindly came and bailed us out. They bought sterling to stop it sinking. And they then sent in the bank manager to try and sort us out, and the bank manager being the IMF. And the IMF
Yeah.
made, I don't know, a $2 billion loan or whatever the figure was, um, and forced the UK government into cutting its spending. And various left-wing ministers, like Michael Foot, immediately left in high dudgeon. But there was absolutely no alternative. Now, the other side of that, which we must not forget, was that there were three gilt issues of 15%, 15.25%, and 15.5%. And this was while the economy was in the sort of condition which Keynes would have turned around and said, you need to stimulate this economy, you need to lower interest rates and increase government spending. I mean,
Mm.
basically, we'd run out of road. We were in a debt trap. And the IMF basically came in and forced us to take the measures to get out of that debt trap.
Mm.
We are in exactly the same position with the dollar today and various other economies.
Let me just
Yeah,
interrupt you there on the UK side because I was in banking first, my first job in Switzerland in Geneva, and then I was offered a job by Dixon's, which was a small retail company at the time, and we built it up to the biggest consumer electronic retailer in the UK and the FTSE 100 company. And so that was great fun. But I came in 72 to the UK, and after 2 years, I had my first mortgage, and that rate went up to 21%. I paid for a while, my
yeah,
first mortgage. So, and that was pretty tough. Remember, we found a letter my wife wrote to her mother and said that, interest is now 21%. It's a bit high, but I think we're going to cope. How many people today do you think will cope with 21% interest on their mortgage? Because now everybody's borrowed up to the hilt. The other thing also, I left the Switzerland when it was 10 Swiss francs to the pound, 10 Swiss francs to the pound, and now it's just over one. So you see what is happening to a well-managed Switzerland. The Swiss franc is also declining to gold, of course, like all
yeah,
currencies, but
yeah,
nowhere near at the same speed as most other currencies. So I've actually seen this destruction of currencies because I've moved between countries and I've
yeah,
experienced it.
yeah,
How they can be totally destroyed, and the UK, of course, was an absolute disaster in the 70s.
yeah.
And average inflation was about 15% for 7, 8 years. It was just
Yeah.
unbelievable.
Yeah.
Sorry, so please continue with
No,
if
no,
you.
no, you're absolutely right. I mean, I remember one month inflation peaked at 25%.
Yeah, yeah,
But it was there was this according to the Keynesians could not happen. You couldn't have something which was eventually named as stagflation. In fact, that was named by
mm,
my uncle, who was shadow chancellor
yes,
when Roy Jenkins was the Labour chancellor.
yes,
He described the economy as being, I think particularly it was about, wage inflation and so on and so forth. Sort of, you've got a stagnating economy and, the Labour government were allowing wages to rise and all the rest of it. And it was a sort of stagflationary situation, which is what Ian described it.
mm,
Now, this, according to the Keynesians, couldn't happen, but by God, we had it in spades. We really had it in spades in the UK. And if you look back, actually, I mean, your point about not understanding history, politicians, is absolutely right. Just look back to what happened in Germany in 1923. I mean, um, do you really think that with the collapse in the purchasing power of the paper mark, that interest rates were at zero or low? No, they weren't. I mean, basically, you find that if you get a collapsing purchasing power in a currency, then the foreigners who own it require to have some compensation for the risk. And that is basically what the interest rate is.
mm,
To use interest rates to try and manage economic outcomes is a huge, huge error. I mean, really, it should be used to manage your exchange rate. Um,
mm.
and that was even the lesson under a gold standard. I mean, if your gold reserves were running out, it was because your interest rate was too low. uh, and
Yeah, yeah.
that was all established. But another way of looking at the point that you made, but the relationship between the Swiss franc and sterling, is that as late as 1932, I mean, we had a gold standard, post-war gold standard, which basically meant that one gold sovereign was equal to £1. Today, a gold sovereign, you can only buy it for 600 quid.
Mhm.
That is the
Mhm.
extent to which the purchasing power of sterling credit has deteriorated. It is now 1/600th of where it was in
I
the
know.
1930s.
So we are in agreement, Alistair, that this cycle is continuing at now a faster momentum.
Mm,
I have written a few articles about that. We are in the exponential phase of this money printing, and also inflation will increase. In my view, interest rates will increase also, which nobody has believed for a long time, but it was clear to you and I. Um, so, the question is, uh, I know I actually took the example of a football stadium that's filled with a drop of water every minute, and then it doubles every minute, and then how long does it take for the stadium to fill? Somebody wrote a comment. Well, that depends on the size of the stadium. No, it doesn't, because it doubles
doesn't know.
it doubles every minute. So even if it was twice as big, it only takes another minute, and it takes 45 minutes to fill the whole stadium, and at 7 minutes earlier is less than 10% full. So
Yeah.
and I think we are, and we saw that, as you mentioned, in Germany, in the Weimar Republic. You saw how hyperinflation just goes
Mm,
so quickly at the very end of that cycle.
yeah.
I think we are, as I said before, at the end of a major cycle. Um, and I've learned one thing, that forecasting is a mug's game. I'm not more interested in risk and direction of markets than actually calling a time or a price for something. Um, and so I know the risk is high, and I know that this is why we're in gold, because it's protecting against that risk. Um, but this is clearly, we haven't even seen the beginning of the fall of this. Well, we have seen the beginning. Most people haven't noticed it, because if you take, all the tourist places in the world are full of people. All the restaurants are full in major cities, etc. So far, because all the asset markets are still at high, so far as nothing has happened. But we know that markets turn very quickly. And I think we are at the end of a monetary era. And when people for example, criticize Trump and say, it's his fault that all of this is happening now, and I mean, it's crazy leadership, and it's going to be a disaster with him. But my view and yours is probably similar. That politicians are instruments of their time.
Mm,
Trump is not changing the direction. He was elected because he's the right one to create an absolute mess, and to take erratic decisions, and tariffs one day 145%, and the next day down to 30 or whatever it is. And,
yeah.
and, and that's just the type of leadership that we need to take the world down, because there haven't been. I've been writing about that for years. There are no statesmen in the world, none in Europe, certainly not in the US. Hasn't been for a long time, and that is just what is required at the end of a major cycle. Uh, so. I, I don't really care where we are in the cycle. I know that we are in the final part of the cycle, and I think it's in a major global cycle. And I think it'll be pretty horrible, the final years of that. So I'm not going to pretend that I can forecast that. And both you and I have been premature in thinking that this would come down faster than it has, like after the 2009-8 crisis, etc. Have you got any, except for the risk and the direction, have you got any better feel of how this is going to this is going to develop and how long
Yeah.
it will take?
Yeah, I mean, I think you're right. In terms of how long it will take, I think I agree with you that Trump is accelerating the direction, if you like, of the
Yeah,
collapse
yeah,
of the value of
yeah,
credit.
yeah.
The other thing to bear in mind is that this is the largest debt cum credit bubble in history. And when that deflates, it takes the
Correct.
market down very, very severely. And the other thing is that what we saw in 1929 to 1932 is exactly what we have today: a huge credit bubble going pop, and at the same time, the introduction of trade tariffs, Smoot-Hawley 1930 Tariff Act. We've got the same combination happening today. So I would see paper markets going down the tubes over the next 2 or 3 years. I would see the purchasing power of the dollar, which isn't fixed to anything, as we discussed earlier, not fixed to gold, going down rapidly with it. I think that this is going to happen really, I think, quite quickly now. I accept wholly your premise that we're in an acceleration phase. Um, how long it takes? I mean, if Scott Bessent hadn't come up with a sensible agreement with the Chinese, I would have thought that this is going to happen a lot quicker. He's bought some time, I think, for the dollar, maybe. He's one of the adults in the room, but it's not going to change. It's not going to change the direction at all. And the other thing, I think, we need to just spend a moment or two looking at the market itself. Um, the Chinese nationals have got something like 27,000 tons. Now, that is not a lot of gold given the quantity of people. The household savings in China amount to around about $2.5 trillion equivalent every year. They're not buying property, that bubble's gone. Stock market is not for everyone, that's for sure. And so what they've been doing is they've been putting money into bank deposits. And the banks have come up with schemes to try and sort of, we'll give you, if you deposit it for 3 years, we'll give you, a better rate, well, all this sort of stuff. The People's Bank of China has been reducing interest rates. It has been trying to push the yuan down. One assumes that was behind the policy, but they've been reducing interest rates. So where do those $2.5 trillion of annual savings go? Well, fortunately for the Chinese household, most banks, if not all banks, offer gold accumulation plans. So what you can do is you can tell your bank, please transfer 100 yuan a month or whatever the amount is into a gold accumulation plan. And that's beginning. I mean, they're the same as us, as humans. They look at something that's rising. They don't understand why it's rising, but it's the only game in town. And
Yeah.
so they think, well, we better buy some. So I think you're going to see there's a wall of money out there, which is going to go out of credit following central banks, which have been doing this for the last 4 years. They've been getting out of credit and into real money. But the people in China are going to start doing this. And the impact, I think, could be very, very, very important. So, the acceleration phase is on us. And I think it's
Absolutely.
going to be driven by, a widening public demand for gold from Asia, if you like, rather than, but we've got the
Yeah.
same thing. I mean, we got people in this country, they suddenly realized, and even investment managers, that the first quarter of 2025, the best performing asset was gold. You had what, 20 or 25% or something rise in the price of
Yeah.
gold, and you had a 7% fall in the S&P. Where is your portfolio? You've got no gold. I mean, this is bad news for an investment manager. So I think we're going to see that sort of money shifting into gold substitutes, mines and so on and so forth. So the whole thing I think is just ready to kick off.
Now you say that, so one of my colleagues who spent 24 years at Morgan Stanley as managing director on the equity sales side He's now in charge of our speaking to family offices and gold. And family offices just like the rest of the world, they don't hold any gold. The rest of the world holds 0.5% of world financial assets into gold, and family office might have 1% average in gold. So, when he goes around to speak to these family offices, nobody owns gold.
No.
And they are there to preserve generational wealth,
Yeah.
and they don't have any gold. It's
Yeah.
all been about short-term speculation and instant gratification, nothing about a long-term view. Um, and that is obviously going to have a major, major change of attitude now. And then we have obviously that we talked about both of us along for
Mm.
a while, the BRICS country, et cetera, et cetera. So there is now clear support of gold on a long-term basis because a lot of money has to shift from other areas. Plus, of course, central banks are moving their reserves from
Yeah.
dollars
Yeah.
to gold.
Yeah.
So the demand for gold will be very strong and sustained, and it's not going to be a rush into gold because central banks are always careful when they buy. There's a long process, but this is why I think the way I see gold now, it's not going to fall in any major way. There'll be small corrections like we're seeing now,
Mm.
but the long-term trend is now so strong because of the demand. Therefore, people are not going to be able to buy gold at prices which are, even at this price now, the major demand cannot be fulfilled at this price that is coming.
Yeah.
So it has to be not just at a much higher price, but as I see it, at multiples of today's price, because there are major, major shifts of major investors, central banks, institutions that are going to move into gold. They're not going to get it's not gold is not going to go to 20 or 30 or 40% of all financial assets. But if it goes to 5, that's going to move gold massively. And
Oh,
if it
yeah.
goes to 10, even more so. Because demand cannot be satisfied by more gold. There isn't more gold in the world, and then
Mm.
the 3,500 tons a year.
Well,
The,
there's an old stockbroker, I would sum it up and say it's going bid only.
yeah, yes, absolutely.
Yeah,
No, that's absolutely
absolutely. Yeah.
right. But Alistair, as we are now, let's be a bit. It's easy to talk about the big picture, but at the same time, we are here, you and I, to advise and help individual investors how to protect themselves here. And one of the things that is very clear that is coming is capital controls, in my view.
Yeah.
Most European countries are already introducing it or have introduced it. And Spain now the latest with whatever it is, 3,000 euros maximum to take out, and even that they have to report, etc., etc. And it's going to be less and less. That amount's going to come down. It's the same in Italy, same in many countries.
Mm.
And in the end, they will basically trying to stop people using real money or taking money out. And the US hasn't done it yet in any major way. But I think that's the next thing that's going to happen, because
Yeah.
once you get this crisis that you are talking about in the banking sector, we both expect, they have to stop outflow of capital. The U.S. government and the U.S. banking in the U.S. banking system. So, how do you see that developing?
I think that's a very good question. I mean, if you look at the whole of the sort of the tariff story and all the rest of it, in fact, it's been American companies from the 1980s onwards investing in production in the Far East. It's
Hmm.
not been a question of, Chinese companies and Vietnamese companies and Thai companies, suddenly sort of springing out of the undergrowth and building factories and suddenly producing stuff. It's been basically American and European corporations. And in order to do that, of course, you need to flow capital, and the banks and the bond markets provided the capital for companies to do this. Now, I think that what we're going to see is we will see both Europe and the US, if you like, persuading business to stop investing in those areas and to increase their investment in their domestic economies. So I think that's the first stage. We're going to see the sort of, soft persuasion, if you like. I don't think that that's really going to work because the situation is inherently dynamic. I mean, we have the problem. I referred to the credit bubble. When you get a credit bubble collapsing, the whole thing changes completely. And so I think that sort of, softly approach is going to change. Now, how it changes in the case of the dollar, when the dollar is the international currency, this is very, very difficult to see. Do they, sort of put up some sort of wall, between domestic use and foreign ownership? Well, that's going to be extremely difficult, I think, to bring about. Um, I think that they are going to try and come up with things, if you like, to try and do it, but they'll just make it worse. I mean, one thing which, of course, our American friends keep on worrying about is will there be another executive order to ban the ownership of gold in America? Um, when you see the gold price rising and when you see politicians thinking this is actually undermining the credibility in our currency, we've got to stop this, then you may well get confiscation. But if they do that, again, we had this in the UK when Callaghan banned dealing in sovereigns. He limited ownership of gold sovereigns. And what happened? It went bid only.
Yeah.
There was no supply. It just increased the demand. So, I mean, that would just make things far worse. What we don't know at this stage, Egon, is what the advice from the US Treasury would be on the matter. If the US Treasury turned around and said, look, they've got some sensible guys in there, dealing in the context which they're given. But I think the sensible guys would probably turn around and say, look, if you ban gold ownership, you'll just you make the thing a whole load worse, really a load worse. And I can think also the geopolitical consequences of that, because I see China and Russia going on to gold standards to protect their own currencies, if nothing else. So under those circumstances, I mean, the dollar is just going to it's just going to go to zero quickly, a lot more quickly. So how they're going to navigate through this mess is impossible to predict at this stage. All I know is that you've got to possess gold before this crisis really hits, because things are going to become so uncertain. They really are. And I mean, I'm fascinated. You're sort of referring to family offices. Family offices, I think, have got to move into a situation where they're looking at wealth preservation and not wealth accumulation. That is the big lesson that they are about to learn, and they'll learn it, I think, when the S&P starts sinking a lot more rapidly. I mean, we've got a bit of stability at the moment after an initial fall. But it's going to go down. It's really going to go down. And what will drive it, believe it or not, is higher bond yields. I mean, everybody's calling for lower bond yields. Yeah, we all like lower bond yields as borrowers. But the fact of the matter is that you're not going to fund a US budget deficit, which is out of control, because Trump is a spendthrift, let's face it. They're not going to bring that under control. And so we're in a debt trap for the dollar. And as that debt trap springs, what happens to interest rates? Well, the lesson of 1976 in the UK is quite simple. You're going to get bond yields that won't stop at 10%. They'll go considerably higher. And what does that do? It just makes the whole thing low bond.
No, I agree with you. I think interest rates, well, yeah, when we experienced the 70s, there's no reason for interest rates not go up to those, not to go up to those levels with the massive demand there is now for money, especially from governments, Western governments. But coming back to the gold and potential confiscation, I don't see the risk of that. I mean, it was very different in the early 30s when gold was backing the dollar. Now gold isn't backing anything, and gold as is today, it's 0.5% of world financial assets. It might now in this massive revaluation of gold that we are expecting, you and I, might go to 5% or 7% or even 10%, but it's still only 10% of global
Yeah.
financial assets. And, it would be better to confiscate property or bank deposits or anything, any other, or stocks, if you want to, any other major area where actually they get a lot more money. I think governments instead, what I think was going to happen is that they will force investors, through the banks, the people who have money in the banks or assets in the banks, they will be forced to buy U.S. treasuries
Yeah.
up to a certain amount of their assets, and probably also, 100-year treasuries at very nominal interest rates. They're not going to get market interest rates either. I mean, I
No.
could see that happening, and I could actually see and of course, if that happens, there will be a rush of cash out of the US. That's going to come, I think, and that's going to be stopped also. So there will be capital controls in the US. I'm absolutely certain about that. And at that point, people will not be able to save their money in a different jurisdiction. So the time now is to do that today, actually. If you have
Oh,
assets outside of your own country, and especially in places like Switzerland or Singapore, where you actually, and obviously you should not hold it in cash or in currencies, you should hold it in gold. I mean, that is the best way to protect your money, to diversify your risk out of, you know, let's face it, the biggest borrower in the world, which is, as you have outlined, is going to increase it by trillions every year. And just you wait until the banking system has major problems, and when you need massive support packages also from the
yeah.
Fed and from the U.S. government, then the borrowings or the deficits, whatever in whatever pocket they put that money, will increase exponentially. And that's how you get, of course, higher inflation, higher interest rates, etc. So,
Absolutely.
so we're back to what we were saying, that, you and I are not trying to sell gold to anyone. We're just trying to, yeah, but it's been our passion since we began with our activities to help people to preserve wealth.
Yeah.
That's what it's all about. That's what you are doing, and you're doing it. You're educating people. I've been saying for 25 years, I've been standing on the soapbox trying to tell people to protect themselves from
Yeah.
what's happening. And in that time, the gold has gone up 10, 12 times, and still only 0.5% of world financial assets are in gold. So people are not listening. Of course, we have followers that follow you, and there are people listening, but there's a small minority. So and we have obviously clients around the world in many
Yeah.
countries, 90 countries. So we also have a very good group of people who believe what we're saying. But overall, that's not happening. But people that don't understand, because when markets are at the top, it's like in October 29. Everybody thought that this would go on forever, the US stock market. Of course, it will never stop. And that's what people feel today also.
Yeah.
So therefore, we are not seeing any major shift in fear, if you want, of what's going to happen today. But so sadly, it'll be a shock for most people. Uh, what what?
Yeah.
So yeah, I mean, we are going to, whether we like it or not, we are going to have a gold rush. And as you pointed out, the market is international. So whatever country tries to manipulate gold or hold it down, so they're not going to succeed. The market is bigger than any individual country
Yeah.
now. And I don't think that the US has 8,100 ton clear and free gold. I
Yeah.
absolutely don't believe that at all. So therefore, and that's why every Treasury Secretary who goes to Fort Knox knocks on the door and looks at some one or two gold bars. Say, yeah, the gold is there. I can assure you the gold is there. And they always, they always promise beforehand they're going to have an audit, and once they've been there, they realize they can't have an audit because the gold isn't there. So, the gold, just they have lent it to the market and leased it, and now it's in the Far East or
It's
wherever it
gone.
is. Yeah,
Mm.
gone forever. Forever. It's never going to come back. All they have some IOUs is from uh, bullion banks or whatever, and they're never going to get the gold back ever. And so that's why, the and we both. Yeah, we are not sellers of gold, you and I. We are trying to help people to protect
Yeah,
their wealth, and there will be the most massive shift now of wealth that we ever seen in history coming,
yeah.
and very few are prepared for it. Um, so the end game is not going to be pretty. I mean, we are obviously social unrest
Mm.
is a major part of it. I mean,
Yeah.
I was quite scared when I read in the UK that there are 50,000 registered terrorists, known
Mm,
terrorists in
mm,
the
mm,
UK.
mm.
That's known. And they are organized, these people, and they have plans not just to cause any problem or trouble in the economy. They actually have plans to attack
Yeah,
infrastructure,
yeah.
you know, water,
Well,
electricity, whatever it is.
yeah. I mean, only yesterday we had someone firebombed a property owned by the Prime Minister. So you've got it on a very minor level, and as well as that, they've arrested. I mean, the trouble is that the government just jumps down on everything, and there's no such thing as free speech in here. I mean, in this country,
No.
it's actually quite similar to China in that respect.
Yes,
I mean,
absolutely.
the difference, I would say, all the propaganda about, how terrible the Chinese are and all the rest of it, and how it's not free and so on and so forth, and how we mustn't have Chinese equipment like Huawei, 5G stuff, all that was all sort of banned. But I
Yeah.
sort of say that actually, I think I don't really mind what the Chinese, if they're interested in analyzing my own sort of personal communications. I mean, good luck to them. I don't think they get it. But my own government doing it, I have a very, very different attitude. So we're getting fed an awful lot of rubbish from, I think, panicking governments, really. I mean, they've really lost the plot. And nowhere is this more obvious than in Germany, in particular. Germany and, they're trying to keep out the AfD. Brussels, I mean, they interfere with national elections if they drift away from their socialist ideals. I mean, this is actually, very much smells of an end game in the whole of our capitalist system. Is falling apart. I mean, what more can one say? And yeah, I mean, you're right. It's we shouldn't be standing up and cheering it. Um, we should be actually extremely worried about it. And I think the collapsing purchasing power of our fiat currencies is just going to impoverish everybody. It's going to bankrupt the state, apart from anything else. They won't be able to provide the welfare services upon which everybody now depends. This is very serious, and I'm sort of looking at this, sort of from a personal point of view, and thinking, well, when all this falls apart, okay, I'm ahead of the game. You're ahead of the game in the sense that you've got some gold, so you've got some protection against this, but you've also got family who don't necessarily understand the argument. You've also got a community around you, and I think that we're going to have to be prepared to take that wider view. It's not just us personally, but it's those
No,
around us.
absolutely. Absolutely.
This is something which we've actually got to seriously think about. Um, it's a process which I'm afraid we've got to go through. I can't see any alternative. I can't see it not happening. And given that we've got to get through it, I mean, let's just hope the thing gets over and done with relatively quickly.
Mm.
We hope against any of our experience that governments will actually stand back and just let the whole thing sort itself out, because the moment they get involved with it, they just prolong the agony. Um, I mean, out of the sort of, if you like, the phoenix coming out of the ashes of this complete destruction. I mean, I'm minded really by Hayek's Road to Serfdom. I mean, it was that
Mm.
condition that led to
Mm.
the extreme Nazism in Germany. In particularly in the late 20s and early 30s, and what happened there. We're not going to get it right first time. I mean, this is not going to be good. It really isn't. The only
Now,
thing I can,
go ahead. Go ahead. Yeah.
sorry, no, no, no. Sorry, I interrupted you. I think I've said my piece,
Oh.
as it were.
Now, this is going to last a long time, Alistair. There's no question about it. This is a major, major collapse of the
Yeah,
Western financial system. The one consolation is that at the same time, the East and the South, the BRICS
absolutely.
countries are
Yeah,
going to come out of this as the phoenix
mhm,
a lot quicker than
yeah,
as the West continues to fall and deteriorate.
yeah.
But you're right. Got to think about family. Got to think about friends. I mean, I'm fortunate to have two sons-in-law in the business. I think we are a major company now, helping people around the world, wealthy people, to preserve wealth. I think after this, what's going to happen, this collapse now, gold will be one of the major assets that any serious investor will always hold. And that will be for a long time. And they won't hold 0.5% like now. That will be 5 or 10 or 20% they will hold. And remember, gold's been around for 5,000 years. And now after this crisis, it's going to be around for quite a long while before people forget about gold again. But it is all about, as you say, helping friends, helping family. If you're a little bit privileged, you have to help others around you because there'll be so much suffering.
Exactly.
And I think that's a very important part of this because we will have problems, not just financial problems, but there will also be social unrest and society will not be what it is today. Law and order will be difficult to maintain. But as I always say, there are so many other values in life
Yeah.
than money. That friends, family, nature, books, music, etc. There's so many things that you don't need money for, except for you need food and your roof over your head.
Oh,
But as long as we can, you and I, we will stand there on the soapboxes and try to advise the few people that will
yeah.
listen, and there'll be more and more people listening.
Yeah.
Alistair, this has been a fantastic conversation, and I thank you so much for your wise thoughts, and not only during this conversation, but for the last, well, as I said, the 15 years or so I've known you, and now you're reaching a bigger and bigger crowd through your Substack.
Yeah.
Maybe you want to mention the Substack. Um,
Yeah. I mean, it's alasdairmacleod.substack.com. And if you can't spell my name, my Scottish name, easily, just Google MacLeod Finance, and I'm sure it'll take you there. But you've also got a Substack, haven't you? No.
Yes, we got a Substack, yeah, von Greyerz Substack, and obviously we've got a website also, vongreyers.gold, or could even vg.gold. It actually, the old one that we had, goldswitzerland.com, works also. So there are many ways of reaching us, and so we're passionate about helping people, so they can contact us any way they want, and we will help them with their wealth preservation plans. So thank you, Alistair. It's fascinating this, and of course, both you and I are passionate about it, and I think a lot of people appreciate what you are doing, and hopefully what we are doing also. And we're going to be around for a while still.
Yeah, well, it's been very much my pleasure, and thank you so much for setting this up, Egon. I think, I mean, I hope that the listeners really do get something out of it, and it's a process of education. And thank you so much for everything that you've done to try and further the education of people as to, how they should protect themselves from something that they don't really understand is actually happening, and it's understanding that what we're seeing is a credit bubble which is going to be imploding, and we're seeing the whole of the collapse, if you like, of the post-Bretton Woods system accelerating. I mean, as you described it, I think you described it extremely well. So, yeah, I mean, I think you and I were on the same page, and not only that, but we have the same objective, and that is to educate people. I don't make money out of dealing in gold or whatever. You offer storage facilities. And so our arguments, I think, are as pure as they can possibly be, free of vested interest. And I think that's the important thing to understand.
Absolutely. And we deal mainly with wealthy people, but anyone can buy an ounce of gold, or not an ounce, but half an ounce, a quarter of an
Yeah.
ounce,
Sure.
a few grams of gold, or they can buy silver, which is very cheap today.
Mm.
So there is so many, and that silver you can get for $30 an ounce, or a bit more. So there are so many opportunities for people here to actually preserve wealth at a level which is right for them, and that's not, yeah, that's what's important here.
Yeah, absolutely.
Thank you, Alasdair. It's been great to talk to you. Hope to see you soon again. And thanks for this time.
Thank you,
Bye-bye.
Egon.